So, Michael, I believe that you think the Aussie is past its best now.
I think so. I think so. In the short term, it's struggled to move above that psychological 80-cent level, and it's starting to come off. Even with the dollar still a little bit soft against the other currencies, the other major currencies. It's overbought against both the US dollar and against on the crosses. I think the RBA has signified that they'd like it lower. The RBA is more concerned on a TWI basis, and the TWI has come up quite a bit since the beginning of this year. So on a trade-weighted basis, they are a bit concerned about the strength of the currency. And you had the Assistant Governor DeVell speaking a few days ago, and he made an allusion about the currency and the interest rates. He said basically that the rising Australian dollar is complicating the economic adjustment. So the economy's been able to adjust as the currency came back down, and now it's gotten back up. Maybe it's come a little bit too fast, too soon for their liking. We saw further evidence of that, the release of the inflation data, the CPI. The headline CPI came back down to the annual rate came back down to 1.8% against an expectation of 2.2%. So it's got all the chances to go down. The dollar itself, we may be seeing a base here and a turnaround on the dollar itself. So that's even going to put more pressure on the Aussie.
Well, I mean, the only thing is, obviously, the dollar has been weak largely because of the, let's say, the political vacuum surrounding President Trump. That doesn't seem to be changing. He can't get anything done. He still can't get anything done, even with the intervention of Senator McCain. So unless that changes, isn't the dollar still going to be under pressure?
Yes, that's very good. I mean, that's exactly correct. However, how much bad news can the dollar take? I think there's a lot of bad news already built into it, and it would take a little bit more than that. The other thing is on a positioning point of view, the market positioning, at least the speculators, they're quite long of Aussie. I'm talking more on the commitment of traders. These are traditional non-commercial traders, which are typically the larger hedge fund type speculators. And we've seen currencies, from the latest CFTC data that there are certain currencies, the euro, the Aussie, the Kiwi, and the Mexican, where the longs are at multi-year extremes. The only currency that's in the opposite way is the yen, where the shorts are actually at multi-year extremes as well. So that sort of suggests to me that if they can't push it much higher in terms of currency, then the euro will start to come off, and the dollar will probably make a more broader-based recovery.
Michael Moran, Royal Financial Trading, thank you very much for speaking with us.
Okay, thanks very much, Zach. Have a good day.